It's easier to count which lenders haven't cut rates this week than those that have, because we're now witnessing what looks like the start of a proper rate war. So starting with the rate cuts, and honestly this week it has been relentless, because HSBC have been really aggressive, cutting rates twice, and Leeds Building Society has cut rates across many of its products, some by up to 0.4%. Whilst we're also seeing Barclays making the headlines, introducing rates below 4% for those people borrowing in excess of £2 million. And that's a psychological barrier that we haven't breached for a while. But it's not just been the big players. We've seen cuts from NatWest and Skipton. Halifax and Nationwide have made cuts of almost 0.25%. And TSB and Clydesdale Bank have also decided that they want to join the rate cutting party too. For those of you that are buy-to-let investors, Kensington has reduced some of the rates on their products, and Coventry have reduced the rates on their limited company buy-to-let range as well. So the average rate that we're now seeing on mortgages is at its lowest level since 2023, which is genuinely good news for borrowers. But here's the thing, and this is crucial. Mortgage rates can very quickly move in both directions. So if you are planning to get a mortgage, don't wait for rates to get any lower. Just act now while they're favourable, because they could turn in the opposite direction. Now, we're not expecting them to, but they can. So to ensure that you get the best rates available for you right now, it's best to act immediately. So this week we also saw the release of the latest Halifax House Price Index, and it showed that house price growth had flattened compared to what we saw in May, with annual growth at 2.5%, down slightly from the 2.6% that we saw previously. The average house price is now sitting at approximately £296,600, and what's particularly interesting in this report is that first-time buyer levels have returned to the pre-stamp duty change levels, which really does show the market's resilience. Wages are still rising, and combined with these reducing rates that we're seeing, affordability is improving, although challenges still do remain. The economic backdrop does have some uncertainty, with jobs data not looking quite as strong as it was, which of course follows on from those hikes that we saw in national insurance and the minimum wage changes that we've seen. But here's a question for you. Do you think that the current rate environment is sustainable? Or do you think that we could be in for more rate volatility? Let me know in the comments what you think. Now, perhaps the most significant news this week is an announcement from the Bank of England, because they've decided that they will allow more lenders to lend at higher income multiples. Now, currently, lenders must limit new residential mortgages with a loan-to-income ratio above 4.5 times to no more than 15% of their new mortgages annually. Now, don't worry, this isn't going to become the Wild West of mortgage lending, even though some people out there might wish that it was. Caution will still remain, and not all lenders can implement this immediately or even at the same time. But this is genuinely good news for those people that have got lower deposits, because it means that more lenders are going to open up lending opportunities to you. Coupled with other mortgage schemes like 100% mortgages or £5,000 deposit mortgages, this really is a welcome move, because affordability still remains the biggest barrier to home ownership for many. So what does all this news mean for you right now? Well, we're potentially going to get another 2 base rate cuts from the Bank of England, and lenders are clearly positioning themselves competitively. The combination of falling rates, relaxed lending criteria, and continued house price resilience does suggest that the market is once again finding its feet. But remember, this can change quickly. Rates can go up as well as down, and economic uncertainties still do remain. And at the drop of a hat, lenders can very quickly change their criteria. So the key takeaway is, if you're ready to move, don't wait for that perfect moment, because it might never come. Here's what I'd like to know from you. Are you seeing this increase in competition benefiting you as a borrower, or are you still finding it tough to get the mortgage that you need? And with all these rate cuts happening, do you think we are really heading for a proper rate war, or do you think that lenders might start to pull back on the rate cuts quite soon? Please do drop your thoughts in the comments below. Now, if you found this update helpful and you haven't yet subscribed to the channel, please do consider doing so, and make sure that you share this video with anybody that you think might find it useful. Until next week, please do keep an eye on those rates, and remember, the mortgage market never sleeps, but fortunately I do the watching for you. Take care.